What's going on, SoFi investors? Jay here. If you haven't yet, don't forget to hit that like button, subscribe to the channel. Thank you guys for tuning into these videos I made this weekend. The response has been overwhelming. We added over 100 subscribers to the channel. Thank you guys. It means the world to me. I just wanted to break down the 2023 year in review and the guidance for 2024. I just want to show you guys and remember where we came from and where we're going. During these hard times, when your stock is getting slaughtered, and it seems like every time we take one step forward, it's two steps back for SoFi. But trust me, in the long term, when we look at the general trajectory of SoFi, when in doubt, zoom out. It's a young company. We haven't been a publicly traded company that long on the grand scheme of things. It took Tesla years and years to see that stock run up. And don't worry, we will have our day, I promise you guys. So I want to go through 2023 year in review that SoFi gave us in their last earnings, and then briefly go over where they expect to see us moving forward in 2024. So in January, SoFi was awarded 5 banking and 2 PL awards in NerdWallet's 2023 Best of Awards. So this isn't a huge deal, but SoFi is getting recognized by NerdWallet and its peers, and getting recognized for what we're contributing to banking and the overall tech sector is a great thing. In February, the SoFi checking and savings account turned 1 year old. I have my direct deposit set up in my SoFi account, so this allows me to get the 4.6% in APR. That is awesome because I got around like 7-8 grand in my little emergency fund just sitting in there collecting the 4.6%, and I make like $25 a month. It's awesome. It's compounded every month, so that $25 just gets reinvested back into that savings account, and it's a great way to just save a little bit of cash and get a great APR. I remember when this happened last year back in March, when all the banks were just shit in the bed. All these little banks were overexposed to commercial real estate, and they were getting absolutely decimated. That's another thing you have to look into when you're investing in banks, is like, where are their loans going to? Like, what sectors? If 80-90% of their loans are in commercial real estate or in personal loans, you want to see a nice diverse portfolio in loans when it comes to banking. If you're overexposed in one sector, you're going to get obliterated, and that's what happened to some of those banks that went under. And then SoFi was like, you know what, guys, I'm going to partner up with this other company and offer up to $2 million in FDIC insurance. So that means you can have up to $2 million in SoFi and feel safe and secure that your money is going to be insured. Also in March, SoFi was named to Fast Company's annual list of world's most innovative companies. And that's what SoFi continues to do. That is their value proposition. They're just not your run-of-the-mill bank. They will, at some point, offer pretty much any financial loan or insurance or mortgage, whatever you want. It's going to be a one-stop shop for all your financial needs, and I love that. And proving that more, in April, SoFi acquired Wyndham Capital Mortgage, adding another branch to their business model. Wyndham Capital Mortgage is a great arm of this business model. Mortgages, for most Americans, is one of the biggest loans you will ever take out, bigger than any personal loan you might need. For SoFi to have a mortgage wing in their business is great. And over time, once we see these interest rates going down a little bit, hopefully over the next 2 years, when Powell starts to cut rates, this segment of the SoFi business model will really start to explode. Another cool little thing that happened in May, SoFi launched SoFi Travel, powered by Expedia. So essentially they're partnering up with Expedia to offer their clients discounts on rent-a-cars, on plane tickets, on hotel stays. It's just another little perk of being affiliated with SoFi. In June, SoFi at Work launches Student Loan Verification Service. The Student Loan Verification Service is just another element they can provide to their members who want to apply for student loans. That was originally what SoFi started doing at first. They offered a nice student loan program that offers fair rates and you're not getting price gouged by the government loans like Sallie Mae and all those horrible student loans with insane interest rates. Also in June, SoFi launches Faces of Finance marketing campaign. Then in July, SoFi Invest offers Oddity IPO to retail investors. That's something that SoFi has been wanting to get into, is offering SoFi members early access to IPOs. It's very risky, I'm not going to lie, to invest in IPOs. So for me, I would stay away from this segment. IPOs just leave us open to a lot of risk that I don't personally love. So they're offering it to members if you're into that sort of thing. I'm not personally, so I'm just going to skip over that. SoFi is named to CNBC's World's Top FinTech Companies, and SoFi Stadium hosts Taylor Swift and Beyonce. So Taylor Swift did that tour that was released on Disney Plus, and SoFi's name was all over Disney Plus, and that was she also released a movie where SoFi was plastered through to hundreds of thousands of viewers. This is such a smart move by Anthony Noto. Brand awareness at the early onset of companies is extremely valuable. Of course, you have to pay a premium up front to do that, but in the long run, it's going to play insurmountable dividends. And in September, they offered ARM and card IPOs to retail investors. Another thing, like I was talking about before, I would stay away from investing in IPOs. It's great that they're offering that. Cool, not for me. Then in October, SoFi launches All Your Ambitions all-in-one marketing campaign. So, SoFi is consistently trying to reach as many demographics as they can. And as an investor, the more people we reach, the ultimately better the company is going to be. And then in November, SoFi Invest launches Enhanced Yield ETFs. I'm actually a huge fan of SoFi's ETFs. They're very comparable to things like VOO. There's a lot of different types of ETFs that fit any basket you might want to enter into. And I really like their ETFs, and I think it's something I'm going to break down a little more in the channel later on. Let me know in the comments below if you want me to break down all their ETFs, their holdings, and which ones I like the best. And then in December, we announced they reached 7 million active members on the SoFi app. Absolutely incredible, guys. In the video I talked about before, we're growing the company around $500 million in revenue every single year. And that's because we're continuing to grow our member base. Okay, let's move on to the 2024 guidance and what SoFi expects to deliver in this calendar year. They first start off with the tech platform and financial services growth of 50% or more versus 2023 levels, and that goes with what we were talking about in yesterday's video. The growth is there. Usually, Anthony Noto is in the business of under-promising and over-delivering. So that's great for SoFi investors. He likes to be very conservative in the numbers he puts out and has consistently been beating them time and time again. They also expect the lending segment at around 92 to 95% of 2023 levels. So they are going to see a small downtick in revenue for their lending segments. And as we go into recession-ish times, that kind of goes with the times, and that's kind of expected. That's not just a SoFi thing. If anything, 92 to 95% is probably going to outperform the majority of the big banks. GAAP net income of around 95 to 105 million on the year, and adjusted EBITDA between 580 and 590 million. And I actually expect that number to be a little bit over 600 million in adjusted EBITDA over the year. And they're expecting EPS between 7 and 8 cents. So you can expect between 2 and 3 cents of EPS every single quarter. And remember, after 4 straight quarters of profitability and positive EPS, we can be eligible to be added to the S&P 500. Also, they're expecting between $300 and $500 million of tangible book value growth. And as an investor, woo, seems pretty good to me, guys. And just as a footnote, this guidance assumes expenses under the EBITDA line to remain flat. A 50-50 revenue split between lending and the combined tech platform and financial services segment, as well as adjusted EBITDA margin ramping to 30% by year end. So this is great to know that 50% of their business is in the tech platform and financial services, and the other 50% coming from lending. So like I said before, this type of company, the more diverse we are, the more we can kind of weigh any type of storms in certain segments. So if, lending segment is only doing 92 to 95% of what we did last year, hopefully we can make up that 8 to 5% in the tech platform and financial services. All right, guys, thanks so much for tuning in. Don't forget to hit that like button and subscribe to the channel if you found any value in this video. I appreciate you guys tuning in. Thanks so much for all the support this past weekend, and we'll catch up with you guys soon. Peace.